Hello, ICONists. This is John TC, and I'd like to welcome you to the first episode of Liquidity. Today, I want to take a deep dive into the technical analysis of ICX. Now, we all know that the fundamentals of ICX is pretty strong. Once heralded as the Korean Ethereum, we saw ICX rise to an all-time high of about $12. From 30 cents to $12 was quite a big steep, and now we see us back at 30 cents. And we're left wondering, is this project going anywhere? And what is going on with the coin? Fundamentally, there's a lot happening for ICON right now. We know that there's staking coming up in August, the election of P-reps and node validators in September, which will ultimately decentralize the blockchain and establish its footing in the blockchain world. So price hasn't really reflected all the fundamental upcomings of ICON. So let's take a look at the technical aspects as to why this is happening. So right now we're taking a look at the ICX USD chart on the daily. So the first thing I want to point out is that we bottomed out at this level here. And this is back in December when we saw Bitcoin hit about $3,200. So at the same time, ICX went from a high of $12 in 2018 and then bottomed out at December around 18 cents. Since then, we really haven't seen much movement. We've been consolidating in a pretty tight range. So the first thing I can point out is that we had a resistance here. Color this in as red. So from a technical price analysis perspective, we had a resistance here. This became a supply zone and we couldn't get over it. Finally, after we double bottomed again in February, we ended up breaking through this resistance and eventually it ended up turning into a long-term support. As we can see here and here, that was tested several times. So I'm going to turn this into green. So we saw some positive price action. We ended up coming up to this area here. This is now going to be our resistance and our supply zone again. So this is the order block resistance. And here is our order block demand zone where people want to buy. And what we've been seeing recently is price has been continuously testing this one area, approximately 29 cents, and support has been holding up really well. Now, I do believe ICON is primed for a move up, but I will always trade on the premise that I don't know what's going to happen next, and there's a good chance that this could go down. We don't know. If it does end up going down, we are in a bit of trouble, and our next support will be at the bottom of this range here. So the support is holding up pretty strong. I'll just mark another area here. This support at 29 cents is holding up pretty well, and we're retesting it currently. We had a small breakout and we came back to retest it, similar to what we saw here. So now what we can expect if this level is to hold is that price will start moving up forwards. So this is what we will consider our range low. The absolute lowest point that this range could hold, and here we'll consider this our range high. And the middle right here, where we tested a few times, I would say move it down a little bit more here. This is what we call our point of control, or our equilibrium point of control, POC, or our equilibrium point. So what will happen is price will begin to oscillate in between this area until it finally breaks through. When it does break through, it will probably retest the point of control and then go for the range high. Now this isn't drawn to scale, but this is kind of an idea of what we can expect to see. So with our range fully set, we want to be able to break this high at 46 cents, where we then could probably see a move up that will break the range high, retest it, and then make our way up further. So following that, our next resistance is going to be at this point right here, around the 70 cent mark. And of course, when we end up hitting here, we could create a new range where this ends up becoming the range high, and this ends up becoming the range low, and somewhere in the middle becoming the point of control. Now, another look into a different chart, we'll look at something that I like to use is the wave trend analysis, which measures momentum similar to how RSI, Stochastic RSI, OBV, and MACD measures momentum. So we'll see that from this wave trend analysis, we currently have a red dot, which means that momentum is technically now bearish. But as I mentioned before, this area is now our support, and it's crucial that the support holds. If this support ends up breaking, there's a good chance that we go lower, probably test support here, and possibly maybe even here, although in my opinion, not really likely. So even though that the wave trend is currently bearish, what we could get is a slight reaction downwards, and then we'll have a flip and move our way back up to the bullish side. Now, with wave trend, you have two extremes. You have your overbought territory here and your oversold territory here. As we're in the middle of the equilibrium between the two, there's a good chance that things could swing either way. So we have to take analysis into some other things. So what I've drawn right now are the resistances and the supports that we're currently looking at. And I mentioned that this support needs to hold in order for us to make our way higher. This is the resistance that we're going to face, as I showed you before with the range. Once we break this range, the next resistance that we're going to meet is the 69 and 70 cent area. Now, this is all pending the fact if we hold the support right here. If we hold the support, there's a very, very good chance that we will end up making our way higher. Like so. We'll probably retest this area and then come and retest this area. So I'm going to say the bad news first. The bad news is that there is quite a bit of resistance from our way up here. But once we hit this 69, 70 cents resistance area here, we can look at this indicator called the VPVR, which is the volume profile visible range. And this is a histogram that measures the trading activity at this particular area. We see that there was quite a bit of resistance or sell-off here. And this area was probably where some people who were buying back in November thinking that the price were going to go up, these people are trapped. So if they didn't sell off with this capitulation, they could still be looking to exit their positions here. But fundamentally speaking, there's a lot of things going on for Icon at the current moment. It'll be kind of a shame for people to sell here when the resistance is not that big. You see the resistance here on the VPVR. There's a lot of histogram activity within this range right here. But if we look at the next OB resistance right here, there isn't that much of a play here. So if we can break through, which I think we will be able to do easily, there's a good chance that we can go a lot higher, as there's no information here, barely any information, and not a lot of people that were buying at these levels. Everyone was buying here, or they've been buying here in this consolidated range. So now that we've taken a look at the price action analysis of ICX USDT, let's take a look at the Elliott wave perspective. And one of the reasons why I'm confident that there is a good chance we could move forward. So Elliott wave momentum measures markets in cycles. And the way you do an Elliott wave count is you start from your base, you make your way up for initial wave one move that looks something like this. Then there's always a correction, usually around 61.8%. And then you get the biggest move of the cycle, which is your wave 3, followed by another correction, and then another move up for 5 waves of a complete market cycle. So what we're looking at here is an Elliott wave count that's done its primary wave 1 move and its primary wave 2 move. Now there's different iterations of counts on this ICX USDT chart. For example, one could be ending here, and this could be a wave 2 move. But for simplicity's sake and for my bias, I'm just going to show you what my count is. So we have the bottom here starting out in December, same time when Bitcoin bottomed out. We made our way up for the first move and then did an ABC correction, a three-wave move for the second move. Now all corrections, wave 2 and wave 4 corrections, they're in three-wave moves. They could be a bit more complex or they could be triangles, but generally speaking, wave 2 is going to be an ABC three-wave move, which we see ABC in a three-wave move. In February, we double bottomed. We came up to about 46 cents in April, which was a big significant alt rally. So it nearly doubled and a halved. Then we started correcting for a wave 4 move. And then finally we came up to finish the last wave of the primary wave 1 count. And we double topped at 46 cents. Since June, we've pretty much been correcting another 1, 2, 3 ABC move, and we're now at a point where at the end of wave 2 and we're about to start the beginning of wave 3, as you can see right here. Now if you can check right here, it looks like we did a 1 ABC 2, and we should be making our way up for the third wave of the third move. And now this is all pending on this support holding. If this support doesn't hold, there's a good chance that this count is wrong and I have to scrap my idea. But if we can hold the support, which we've been doing several times, as this is a very confluent zone, we've tested it here, here. This used to be a resistance here, here. So this is a very, very critical area for ICX, the 29-cent mark. And we had several tests here, and these are all daily candles. So for about 2 weeks, we've tested this about 6-7 times already. Now the thing about ABC moves, when they go in a downward fashion, they tend to form a 1-to-1 extension, meaning that the top of the move to the start of A to the end of A, measured from the end of B down, should be the same distance. So this distance to this distance is going to be the same distance as this distance to this distance. This is a very confluent area because we have the 1-to-1 extension of the A and the C, and we retrace into what is known as the golden pocket. Now the golden pocket is anywhere between the 618 and 0.5 retracement areas of a Fibonacci retracement. So measuring the move from the bottom here to the top, this area becomes the golden pocket. So again, this is really crucial that we hold this level, and if we can hold this level, we should be making our way up for the third move, as shown in this area. And I've been saying this multiple times, if we can come up to this resistance right here, we might test it, we might reject off of it, but if we are able to break some of the resistance here, there's a good chance that we can move forward. Based on my previous chart here, there's no resistance after the 70 cent mark. So if we can muster up enough momentum to push us out, and if we can hold the support here based on the Elliott wave count, there's a good chance that we're about to move forward. So guys, as I wrap up, I want to thank you for joining me on the first episode of Liquidity. I know things are not looking so good with Bitcoin going up, altcoin dominance going down, Bitcoin dominance going up, but it looks like a lot of these alts are ready to capitulate. I know that the BTC pair looks a little bit weak, it looks pretty abysmal, but if you focus on the USD pair, we want to focus on the idea of decoupling, ICX moving on its own. And we can see that from this point, the price in US dollars hasn't really moved. We've just been consolidating in this range. And if we can finally hold the support and get a nice push up, we did have a little bit of a first move just to kind of like break the resistance. If we can get another move up, there's a good chance that we'll go a lot higher. Hope you enjoyed this video. If you have any questions, you can @ me on Twitter at JohnCCT, or you can find me in the Icon Traders group. Have a good day, everyone.